All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Thank you all for being here. I'm glad you guys can make it. And let's go into the charts. Okay, so let's go over to the euro dollar. So the euro's above 110 right now. And remember, this is the objective, is 110.50. We get above 110.50, we can close above there today. That's huge. I mean, that's where the dollar weakness, I think, really starts to set in. Remember, we're looking for breaks on, the pound's already broken out. The dollar Canadian has broken down, below the 120 250 level. But really, we need participation from the Aussie, the Kiwi, obviously the Euro, the Swissy. There's a few currency pairs that really haven't broken. So when you have one or two currency pairs bucking the trend, it doesn't really, to me, doesn't suggest that the dollar is really ready as a whole, ready to pull back. So 110.50, I don't think I have to go into any detail here about how important that resistance is. I mean, anybody who's been here for, 110.50, who's been here for any substantial amount of time on a daily basis, you guys will know that's the really key level, period, end of story. Now, where's support? So, I always try to think, okay, especially we're in a range. So remember, one of the things you also have to think about, and I have to say this, and I know you'll know exactly what I mean. Currencies always look most bullish and most bearish when they're approaching their range highs or lows. Okay, so like if you look at the euro dollar here, this is exactly what people were thinking at this time. Oh my God, we were breaking. We're gonna finally crack this resistance. Holy crap, you see that? Oh my God, that is a big green bar. Oh my God, we're going like right up here. We're going straight up. We're gonna recover down up to 125, right? Whammo, okay? This is us again. Oh my God, we're building right into the resistance here. Oh my gosh, it looks so, this thing's gonna break out. Oh, look at it go. I mean, here we are yesterday. Oh my God, this thing is gonna rip. We're gonna break out. We are going higher. And then, at what point does the euro dollar turn lower? Okay. At what point do all the euro dollar bulls go, ah, crap, that was another failed breakout attempt? That's the point I want to look for, because I know where it turns bullish. Okay. But where does it turn bearish? That's the key. Where is everybody who's long the euro over the last week? Everybody who's been chipping at it, thinking, okay, here we're going to break, everything's good in Greece. The Fed isn't raising rates anytime soon. That's going to open the door for a euro recovery. Europe's fixed, whatever the reasoning is. But at what point do the bulls just say, damn it, that was it, it's not going to do it? Okay. My opinion, it's right below today's lows, which makes it very easy to read today, because that right there is where the most recent uptrend line really coincides with the lows. Okay. And that comes in at basically 109.50. Below 109.50, that's going to be support. Below 109.50, and we close below there, well, guess what? We're probably going back into our range. And I hate being in a range, guys. Everybody that's been listening to me for more than 5 years, up to 13 years on this webinar, knows that I hate being in a range environment. It's like, I literally want to pull my hair out. I hate it. I know, but it's part of trading. I mean, it is what it is. We're range bound 80% of the time. We're trending 20% of the time, give or take some percentage points. I hate range bound markets, but it is part of what we're doing. So, hold on really quick. I gotta look at something. Okay. So anyway, so we're in a situation where we're at the upper end of our range. I think it's a little premature to get extremely bullish the euro, but we have to have awareness, and I know we all do, that like currencies like the pound dollar are breaking out. Matter of fact, let's go take a look at the pound. So now let's not lose sight of the fact that what's happening in um, Great Britain here in the next in the next couple of weeks. We have an election, right? Right, and it's a close election. It's not like not a sweep by the Labour Party or the Tories. So it's a very, very tight race. Now, we've gone a little bit farther than I thought we would. When we broke the 152 level, we came out of this range. Okay, 152. Oops, sorry. We came out of this channel that's really held us in check since summer of last year. Okay, we broke out pretty aggressively. It was a nice 3-day big move. I've been pretty impressed. The 38% retracement, by the way, of that channel, that comes in at 155.50. And if you asked me before, if we break out 152, where do you think we're going? I said, well, we're probably going back up to 155 or so. That has always been my answer. And we got above 152. I shorted the cable earlier this week as we were below 152, but as we closed above it, I closed it for a loss, and I should have turned around and went long. I personally am very nervous being long the cable ahead of an election that is more than likely going to produce a hung parliament moving forward. So it's to me, the fundamental backdrop doesn't match the price action for the cable, which automatically puts me out. Like I tend to trade, especially when I take a position in the market. I tend to trade based on a macro backdrop, will develop my bias, and then my technical readings or analysis, if you will help sharpen my entries to get in. So typically when we break above a channel like this, the first thing I want to do is just go long the cable. But again, when the fundamental backdrop doesn't match the technicals, then I'm not going to participate, and I'm fine. I'm good with not participating in moves. It took me a lot of years as a trader to develop that skill, to not have frustration when I miss a trade. When I miss a move and go, oh my God, I knew in my mind, if I bought it at 152, or if I turned around and closed my short and went long at 152.20, I think I got out at 152.22 or something the other night, that I would have made money. Because I know technically that's what it was telling me. But again, the risks are, maybe the polls would have swung, towards the Labor Party, or excuse me, towards the towards the Labor Party, and then then the pound would have just tanked. So not being in it has been fine by me, but it did go further than I thought. When we stopped yesterday at 153.30, that was a 786 127% extension of that spike high move all the way to the false breakdown, which we've been very keenly aware of. I thought we would stop here. I thought, oh yeah, we might extend ourselves to the 260% extension of that last move, but I thought that would cap us. So making it up to 154, hitting the round numbers, very characteristic of the cable, because the pound is very good at producing false breaks and overshooting. Okay, you all know that, right? The cable's really efficient at false breaks, okay, false breaks and reversing, overshooting. Because if you look at that candle right now, heaven forbid the cable ends up the day at its lows below 153. That's going to be an overshoot, false breakout at some big key levels, and that's going to produce a big reversal back to 152. That's possible today. You get a firm GDP number and then an FOMC that's not as dovish, and the next thing you know, we'll be trading at 152 in the next 2 days. So um, it's too early to look at the daily candle right now and make it a decision from here. But as you can see, um, this is a pretty as you can see, this is a development I think we should keep our eyes on. Now, let's go over to more of an intraday perspective, and I'm going to delete these fib levels. So just bear with me, okay? For now, I'm gonna delete them because what we've got to do before I delete everything, I just don't want to delete everything. I hate removing everything because then once I remove everything, I go, oh, why didn't I just keep that? I needed that one thing. All right. Obviously, the hourly charts, here's the 4-hour. We got really overbought. We turned from being overbought. We probably need to come back to mid-range relative strength before we can, figure out what the next move is. If you look at this parabolic move in the cable from 152, once we broke out, it looks like to me that we need to reset. We need to pull back and reset for bulls, which would suggest that a move back down to 152 may happen, and it could happen. Here's your hourly chart. Your hourly charts are trying to reset right now back to mid-range. But let's see where key support comes in, because I think that's going to be, whoa, wrong line. Grab the wrong thing here. Okay. There's a pretty solid trend line that comes through there. That's probably going to be pretty good support. That comes in at 152.50, because by the time we get there, if we get there, that will probably be where we're going. Okay, if we start to really come down, again, think about dollar strength coming through the market. This is going to produce a great place to be on the long side. Right there. Okay, 152.50. Okay, remember, this is one of the currency pairs that are actually outside of the range, and it's bullish right now. Okay, resistance is 154, or whatever the highs are. What are the highs overnight? 154.05. Okay, 154.05. That's resistance for now. It's minor resistance, and going back to let's go back to the 4-hour chart here. See this move? We're past extensions from there. This one was the 261% extension. We overshot it. So yeah, so 154 is it's offering resistance. It's just not great resistance. But remember, if we can get a dip down to 152.50 today, that's probably going to be a great place to be on the long side. For those for those of you looking to play dollar weakness, that's going to be probably a really good place. We get through 152.50, then we're going to test 152. We test 152 and we can't hold, then next thing you know, we're back down here. And remember, we are just a couple weeks away from the election, so it's things can get pretty volatile here. I'm personally staying away from the cable, so just as you know. All right, so here is the Swissy. So the Swissy, as you know, we have a bearish wedge pattern. Okay, some people are viewing this as a head and shoulder pattern. It's not a head and shoulder pattern. There's no arm, so it can't be a head and shoulder pattern without an arm. Okay, it's a bearish wedge. It turns bullish above 97, bearish below 94.75. Okay, we already know the 94.75, 94.80. 94. I'm just going to write 94.75, whatever number we've been writing down the last couple of days, last week or two. 94. I'm just going to write down 94.75. That is critical support. So again, this would coincide with the euro breaking through 110.50. If the Swissy breaks below 94.75, it's going to be very bearish for the dollar Swiss. It just is. Okay. Now, where does the Kiwi turn bullish? Or Kiwi. We're moving on to that here in two currencies. Where does the Swissy turn bullish? Well, it doesn't turn bullish until we breach 97 cents, but I think 96 will offer good resistance for today. We're still in a range. Dollar yen. So the dollar yen, yesterday I told everybody in the chat room, I'm like, I'm thinking about closing my dollar yen short. From well, my cost average on my dollar yen short is what happened there? That's not right. What? Something. I have to reset something. Anyway, my dollar yen, okay, short is from 121.40, okay, and I've been, or excuse me, 120.40, and I've been sitting in it for a long time. But hold on really quick. Let me check something. What happened here? Guys, bear with me for a second. I'm sorry, I got to check something with my account when I'm done here. Anyway, I was thinking about it after yesterday because we didn't break through this 1880 support, and and I should have closed out, but the dollar yen is still very much in a range environment. We have been since the beginning of the year, and it's been, actually we've been in a range environment since October of last year, and I think we've had range on the dollar yen written for almost. This is exactly looks exactly like the euro dollar does currently. This move right here, that's exactly where we're at right now in the euro. You understand? It's pretty much the same thing, and kind of don't think for a minute that we can't do the same thing in the euro dollar for the next, 2 or 3 months, because we could very easily just do that in the euro dollar for the next 2 or 3 months. As much as I don't want to see that happen, it could pull a dollar yen and be very, very frustrating. So anyway, here's the dollar yen, and right now we've got a bit of a wedge on the daily chart, the 4 hour, but the wedge top doesn't come in until 120. Big support is going to be down here at 118.20. We had 118.50 written down yesterday. 118.80 or 75 is what we're going to have to write down today. So 118.75 is support. Okay, and let me remove this really quick. Let me remove that too. See, we have this. Actually, I need that again. Double bottom. Resistance is right here, which is 119. 45, 43, 45. So I mean, if it's so frustrating, this dollar yen, because if that breaks, what do? We do this, right? And we spike back up to 120.15. Possible double bottom, neckline, break, resistance. Okay. Look, good data today. Not saying that we're going to get it. I'm just saying if we get good data today, what happens? We get good data. The Fed doesn't sound as dovish. We'll be sitting at 120.15 by the end of the day today. It's very, very possible. Okay. Not saying it's going to happen. I'm just saying that is a possibility. So 119.45 right now, resistance. and we are in a frustrating range environment. So there it is, range. All right, let's take a look at the Canuck. As you guys know, or at least some of you know, most of you know, I picked up the dollar Canadian yesterday. My cost average is 120.74. Okay, I'm just sitting in the trade. Why? Because I've been planning to buy the dollar Canadian down here for the longest time. I just got a little trigger happy yesterday. 161% extension of recent range, 38% retracement of this last move that started in July of last year. So we're at the 38% retracement. And if you take the low from back in 2011 to the high, we're at a 24% retracement. So you can see big confluence here at 120. We had a double bottom on the hourly. This all happened in Europe. I was asleep when this all happened, but double bottom, neckline, target, achieved. Okay, that happened really quickly. I didn't. I was sleeping when that all happened, but you can see double bottom, neckline, target achieved within maybe a pip or two, and then we pulled back down. Okay, now the good news is we have now defined what our range is ahead of the FOMC and US GDP, which if you extend that further back, now you know that 120, what's that low there? 120.80, it's key resistance today. 120, whoops, 1.2080, key resistance. Now, 120 is going to be really critical support. Now, I would caution you from getting too bearish down here, because again, if you go over to that 38% retracement, that comes in at 119.96, basically 120. And why did I just delete that fib level? Okay, you got that 24% fib that's currently at 120.22. All right, so you've got a lot of support down here. Just be really careful about getting short down at 120. Okay, unless you see the dollar breaking down across the board. We are in a bearish trend, so selling rallies makes more sense, but you know what I would be thinking here, and this is not because I'm long, I'm just saying that if you want to short the dollar Canadian, because it is in a bearish trend, I am trading counter trend, as you guys can see. A rally back to 123.50, as I've been wanting to do, is I've been wanting to trade both of these prices. I wanted to buy it down here, and I've been wanting to short it at 123.50. I think that's going to be a layup short should we get up there over the course of the next couple of weeks. Okay, I'm just saying if we get up there in the next week or two. But for right now, this is key support while the dollar is holding up. All right, let's go into, let me see if I can go into the Kiwi really quick before we take our next break. So Kiwi, very easy to read, because I will say again that 77.40 is critical resistance, period, end of story. We break above that, guys, that would be extremely bullish. Okay, we are still in a range, but if we can break out of that, man, that would be a big bullish breakout. We should be up at 80 cents pretty quickly. I would think a test of this level would come relatively quick if we broke out. Believe me, that's one of those trades that I've been trading the Kiwi so long to the short side, I'd be kind of excited to trade that for a squeeze. Okay. Now, also keep in mind the RBNZ is on tomorrow, and so we have to get past that first. But you know, again, I think if we break through here, it opens the door for 80. Okay, over the course of the next week or two. Now, the Kiwi though, the problem is it's knocking its head up against some pretty key resistance. So where Okay, so back below 76.50, probably get some sellers, get some, people that have been buying the Kiwi. It's going to get them out. So it comes below 76.50. Okay. When I come back, we're going to do the Aussie, the dollar index. We'll look at the Swedish krona, Norwegian krona, um, peso. So don't go anywhere. We got a lot more to do. Thanks everybody for being here, and then I'll try to get to some questions. All right, be right back. All right, guys and gals. This is Blake Morrow. You are listening to the Morning Edge webinar, and I want to welcome you all back. Now, I want to give a big shout out to the guys and gals in our chat room. They are goofing off early this morning when I came in. Oops, thought I launched that. Oh, there it is. Okay, they're goofing off this morning. Like I said, as I jumped in, and they are now. I put them on jumbotron. There's Marie and Ben and Ziggy and Greg, and looks like Beth is typing. There's Beth. There's Marie says, "Come join us." The water's warm in here, really. There's DK. There's J Rod. There's Mike Beans. Say so. They were goofing off this morning, and you can go in and change your name. So you can go in and I think I forget how I do it, but right click or some. Anyway, I have to go and try to change my name. Oh, change my display name, and then I can change my name to Blaker Ruski, and then but these guys were all changing their names into some pretty funny stuff, uh, and and they had some just goofball names going on this morning. Anyway, I told them I'd have to harass them while we were on air. So that's our, we probably get another 30 or 40 more traders after this webinar that come in here, and we have a pretty great community of traders. I know. Look at Beth's on good behavior now. All right, I'm out. Just these guys are funny. I really enjoy our community. We've been running those chat rooms for years, and we have a lot of great traders that have blessed us. Oh, for those of you that I meant to do this a couple weeks ago. We had a trader in here in our chat room. His name was Lorne. He's from Toronto. He was a real savvy trader, and he was on Twitter quite a bit with us and whatnot. But he took he was a desk trader, and he took another. He went back to work for a bank. He got he was traded on his own for a while, and then he was with us during that time, and then he went back to trading for um, whatever TD Bank or whatever. He's a desk trader. He has oh, it's really interesting. Hold on one second. He said hi, and he said hi to everybody in the chat room. Says he mentions everybody. And guess who I just heard from just moments ago, privately? I just heard from Brazil 61 from Chris Bear. So Chris just reached out to me moments ago and said hello. So if you guys are wondering where he's been, I don't know where he's been. He just says, hey B, all good here, just super busy. Hope you and the family are well. So I just got a note from Chris Bear. So anyway, all right. Let's somebody just screamed bonds. Bonds hitting lows. Ooh, bonds are rolling over. Bonds are rolling, and then we're going to get back to the Aussie, so just stand by. I just want to go take a look at the ZBs. Wow, look at bonds taking a nosedive. Here's the 10-year. Okay, that's a double. By the way, do you guys know what that is? This is the 10-year. It's a failed. It's a failed. There's a failed flag pattern. Oops. There's a failed flag pattern, but you can see it right here. Okay, it was a. Let's go to the 4-hour chart to be better seen. Okay. We are looking at it as a, I guess I shouldn't have deleted all that. We were looking at it as a flag, right? Looking at a flag, but it didn't break out. So now we've got a double top. There's your neckline. Bonds are dropping, baby. That's an hourly. And so if bonds continue to drop, yields are going up. And if yields go up, dollar tends to firm too. So keep that in mind, guys, as we head into the FOMC today. All right. So anyway, bonds are looking a little scary. Thanks for the heads up, guys, in the chat room. All right, going back over to where are we at? The Aussie. Let's go take a look at the Aussie dollar. So here's the Aussie, and key resistance, as you guys know now, 80 and a quarter, 80 and a quarter, 80 and a quarter. We wrote down as resistance yesterday. 80, 25. That is a critical level of resistance. That's why there's an asterisk. We are still in a range, as much as you guys want to be bulled up here. Let's get rid of this channel. Okay. Let's get rid of the fib, and let's get rid of this. And you see, nice parabolic move in the Aussie, and that very much looks like a flag pattern. Now keep in mind, the Aussie looks bullish against a lot of things too. You know, like the Kiwi, for example, is a good example of what the Aussie looks bullish against. But you have to imagine, okay, where does a flag pattern really give up? I mean, where do people say, oh shoot, that's not a flag pattern, that's really just, you know, just kind of broke down? Well, I would say right there. Okay, so let's remove this. Let's remove that. And these are longer term monthly fibs, by the way. You know, all big. Previous support right here is 80.65. Don't forget those levels. This is why this 80, you know, quarter, 80 and a quarter level, why these are such big resistance levels. Okay. Huge resistance levels. So here's your 4 hour. And again, it's a move below 79.35 that will probably, bulls will become deflated if we break below 79.35. Okay. That's going to let all the air out of the balloon. All right, let's go over to the dollar index. Now, with the dollar index, let's zoom in a little bit here. Okay, so this is our channel. This is a copy of that. And look how disciplined it is. Low, low. This right here. You can very easily see now where our parameters are. Our parameters are very easy. 96.20, 95, let's call it 95.80, okay? Maybe 95.75, because it's a descending trend line, so 95.75 and 96.20. And don't forget, when you're looking at the dollar, okay, remember the breakout point here is at 95.50, okay? 24% at 95.50, and we're at 96.20. So even if are we at 96.20? No, we're at 95.96. So even if we fall 40 cents here in the dollar index, you have to imagine, 110.50 in the euro dollar, that could be a beautiful place to be on the short side because that's going to be the breakout point for the dollar index. So just think about that, okay, before you get really, really bearish the dollar. All right. Okay. Let's go over to the peso, and then we're going to do the Nordic currencies. So obviously the Swedish krona, dealing with a Riksbank that did not cut rates, and that's given the Swedish krona a big boost. The Mexican peso yesterday, okay, we broke down yesterday. You see it? Okay, we were here. We broke down our double top from over here. Bam, bam, double top. There's the high. There's the other high really, and then range extension. We hit it and bounced. Okay, that's good because it still helps us identify what our levels are because 1535 and 1518. Okay, so now we'll just take this low here. Okay, 1518, 1535. I know I don't trade the peso, but I know a lot of you guys do. So 1518, right? And then 1535, 15. And also, don't forget this about the peso. I'm just going to take a step back for a second. There's the daily chart, but keep in mind, the peso is still very bullish. I mean, yes, we are consolidating, but man, considering the euro rallied to 110 from 105, and the peso's pulled back from, it's pulled back from 1550 basically to 1528, where we're currently at. This pullback has been very minor. So, okay. So with that being said, if the dollar rallies, like let's say the euro jams back below 109 today, there's a very good chance that the dollar Mexican peso could be in proximity of a breakout here in the next week, like a breakout to new multi-year highs. Okay, if we are in a range environment in the euro, and the euro comes back down into its range after today, the US dollar Mexican peso, which never pulled back, could go right to highs. Norwegian krona. Okay, so the Norwegian krona, we breached its 127% extension. We got a bit of a doji right now. I think it's down just a little bit in sympathy of the Swedish krona. Okay, we're at a 786 or just below a 786 here. 161% extension of the most recent move. Probably be a very likely target here. 4-hour chart's getting pretty oversold. 756 probably be the next really level of support. Hold on, I want to try something else. I want to get rid of these fibs real quick. Just want to try one last thing. Oh man, forget that. We just hit 127% extension today of that move. That was from, February lows, or March lows, excuse me. March lows to April highs, 127% extension. 760. Okay, stand by. Where does it start to squeeze? Those are the questions that I have to ask is, okay, well, at what point do you go, if you're short, the Norwegian krona, at what point do you go, damn it, this thing is moving against me? That'd probably be back above here, that low right over there. 760, 771. Okay. I still think we're in a range here. Now, the US dollar Swedish krona, though, this is one thing that's going to weigh down on the Norwegian krona, even though the Norwegian krona is a commodity currency, and um, the commodity currencies like the Aussie and the Kiwi are a little weaker. The Swedish krona bouncing back a little bit, but you can see that spike down was from the Riksbank decision. So at what point does the squeeze really start? It's going to be right through here. So let's grab this, let's move that over here. Let's delete that. Delete that for now. We don't need that for now. Supports at 830, basically 837. Yep, 837. 8.37. And resistance, we back above 847. That's where it starts to squeeze. 8.47. Then you get a hammer. You know what I mean? So we're still in a range. I know it looks bearish, but I mean, look at off the highs. Okay. I mean, we broke some trend lines, but it's been that way for a while. Okay. Oh, wait a second. Just as I was saying that, I thought we broke. Wow. Okay. Came right down to the trend line support. So think about this. If for some reason we start to squeeze and we close the day above, like, let's say 850, that's going to be a squeeze, like a squeeze. Okay. Anyway. All right, there you go. So US dollar, Swedish krona, done. Your bias chart is finished. I've got a few minutes. Let me take some quick questions. Wow, I'm way deep in questions. Okay.